Hello traders, welcome to the news trading course and the third module, news that move the market profitably enough for us to trade. Today we're going to, I'm going to teach you how to trade the jobless claims. And what we're going to do is we're going to go to the economic calendar. And we're going to look the date and the time of the release. Then we're going to go to the MT4 platform and go through the Euro US dollar price action during the release. Now, this is the economic calendar. Okay, what I've done here is I've gone through the filters on the economic calendar, and I have filtered out everything but the employment numbers. Now, I have applied the filter, and we're going to use a release that was big enough, or the change was big enough, that we had a nice break out of the levels. And we are going to be using April 30th jobless claims on the United States. You can see that the previous numbers were an outstanding 296K, and we went down to 262K. This means that we had a decrease in unemployment numbers, and this is good for the US economy. Thus, we have an immediate appreciation of the US dollar. So we are going to be looking to sell the Euro US dollar. But because this is, we're looking in hindsight right now. We already know what happened, so it's easy for us to tell, or it's easy for me to tell you that that is what we are going to try to do. And this is why we use pending orders or buy stops and sell stops to trade these unemployment claims, because we don't know what's going to happen, and because the numbers are always clean, and because they are always presented alone at the time of the release, the move is going to be also very clean. So we're going to go to the MT4 platform, and we're going to go to April 30th at 3:30. Okay, so this is the time of the release. We're going to go to the 1 minute chart as always. But before we go to the 1 minute chart, let's go back to the hourly chart. The 50-minute chart. And what we're going to do here is we're going to locate the levels of support or resistance that we need to break in order for us to trade this event. Remember that we are trading at the time of the release. This is the price action that we were trading at. Okay, so we need to break with this high. Okay, and you can see that this high was a strong level of resistance, and then we tested it back right here. Even though we dipped below, this is a fake out, and we started to trade above it. We broke above it, then we retested it as support, and then we broke, and then we continued to move up. And the level that we need to break to the upside, in the case that we have bad an increase in jobless claims, is this level right here. Now, because these are the levels that we need to break, and price is trading at the time of the release around these levels, we are okay by putting our buy stops a few pips below. Buy sell stops a few pips below. So let me just adjust this and color it red and thicken it up. Okay, so this is our sell stop, and this is our buy stop. Okay, buy stop level. If we have good employment numbers, price will go down, and it will fill us on the short side. If we have bad employment numbers, price will go up, and it will fill us on the long side of the trade. Now, for the stop loss, as you can see, we have a range of around 60 pips. So we have to go to the 1 minute chart. Okay, and if we go back to the 1 minute chart, you're going to see what's going to happen. Let me just go back here, and let me show you the actual release. Alright, so as you can see, we are at 3:22 p.m., 8 minutes before the release, and we have already our buy stop level a few pips below this level right here, and our sell stop. I'm sorry, this is the sell stop level and this is the buy stop level. So the stop loss level for the sell or the pending order to the sell side is going to be right here below or above this high, because if we get filled and price comes back and tests this high as resistance and then comes back down, we're okay. But if we break to the upside, the short idea is invalidated and we need to get out. So this gives us around at a nice 26 pips stop loss, and the same goes to the long side for this high. If we break to the upside and we retest these highs as support and then we go back up, it's fine. But if we break below this level of resistance now being tested as support, we need to get out because the long idea is invalidated and we have a 20 pip stop loss. Then the actual release comes on the wires and we are filled, and as you can see, we get filled right here, okay, as we already had assumed. But what we failed to do is we failed to choose some targets to the downside. So what we're going to do is we're going to choose the next level of resistance as targets, and let me just color this black so we can know for sure what levels we're talking about, because of course if we break to the downside we are going to find buyers at the previous level of resistance. Now let's go back to the 1 minute chart and to the actual time of the release. So you can see that we get filled on the short side and right at the release of the numbers, okay, and then we experience some consolidation before going down, okay, and then we ultimately hit our targets for a nice 46 pip win. Remember that these releases or these news releases, we are only looking to make between 30 and 50 pips. We are only trying to profit from the momentum or the volume that comes into the market when the data is being released. And of course the same would have been to the long side of the trade, I'm sorry, if we would have been filled on our buy stop at the top of price action.